This is Rick Rule for Rule Investment Media, sponsors of the 2024 Boca Raton Natural Resources Investment Symposium, uh, July 7 through 11. This interview is in support of that conference because we're going to give you 50 hours of programming over 4 days, and because nobody will be able to absorb all the information that we're going to give you in 50 hours. What we'd like to do is introduce you both to the exhibitors and to the speakers before your conference so that you can allocate your time and frame your questions more intelligently to better effect for you and everyone else. Today, I have the good fortune of introducing a friend of very long standing, Brian Dalton of Altius Minerals. Brian, despite his relatively young appearance, has run Altius for 3 decades, and I'm proud to say I was one of the very, very, very earliest shareholders of Altius, and I and my former clients benefited for 30 years by his stewardship. As everybody listening to this interview knows, every exhibitor, every public company exhibitor at this conference is owned in my own accounts, which I guess is a disclosure of conflicts of interest. But Brian, as that is true, thank you first of all for almost 3 decades of stewardship of Altius on behalf of shareholders, myself included, and thank you too for your ongoing support and sponsorship of the Natural Resources Investment Symposium. Welcome.
Thank you. That was a pretty crazy endorsement, but I'll have to throw one back because I don't think without that early involvement and endorsement from Rick Rule when we were a bunch of little kids in our 20s, still in university trying to start a company, we would have gotten anywhere near where we've gone to today. So thank you.
Well, I'm delighted to have played a small role in the success of Altius. So I'm going to suggest to the viewers that the value proposition here is both a sum of the parts. I'm saying this, not you, but I hope you can support it, which is to say that the company would break up for more than it's selling for, and you get the track record for free. And the track record is, in fact, exemplary. From a nickel pool to a double-digit share price while paying dividends is an extraordinary track record. Let's talk, Brian, something about both the sum of the parts, the track record, and where you're going from here. And let's do it in 3 different circumstances. Tell me, first of all, about starting off as a prospect generator, using intellectual capital to attract other people's physical capital, and then using that to reduce the amount of dilution at the equity level that we've had to suffer.
Yeah, so we started the company literally in the backdrop of the Bre-X scandal unfolding. So obviously not rosy market times, and maybe our idea when we originally launched was to do what everyone was doing: raise money, drill some holes, hopefully make a big discovery. Well, the little problem of finding capital to do that suddenly popped up almost from the day we went public. My parents were the only people to buy shares on the opening day of trading, by the way. So just to put that in context. So that quickly brought us to our own roots as prospectors. We'd funded ourselves through university by prospecting and farming out projects and keeping little royalties and some option payments. And we knew that we would have to basically do the same thing within Altius. And so I guess we were driven to it out of desperation, but we learned a lesson in cyclicity there. We really liked the model. I think we found that we were pretty good at generating projects that big companies would be happy to spend money on. And, really, partly with some of your coaching, I would say, and mentoring back then, just the rational nature of of having your projects explored that way, retaining interests, and protecting your capital structure. So protecting that share account practically at all costs became very important to us. And so today, 30 years in, we have still less than 50 million shares outstanding. And as you say, that's over almost over almost 30 years now. So it's a model that it's. Sorry, go ahead.
Do you have any memory of how much third-party expenditure has occurred over 30 years for the benefit of Altia shareholders? Must be an astonishing number.
It'd be a fun one to calculate. I can't say that I have, but I can tell you that in the past 3 or 4 years, we've averaged more than 300 kilometers of drilling by partners a year. So you can do some quick math on that. And I'd be surprised if the number, if I were to total it up, if the number didn't start with a B.
So you have both generated royalties from carries on prospect generation and bottom. Perhaps the next thing that we should do in terms of the sum of the parts discussion is talk about your royalty assets, how much cash they generate, what sort of return on capital employed you generate, and what your suspicion or somebody else's suspicion of the net asset value of the mineral royalty portfolio is.
We actually did a fair bit of work last year around our investor day on that, some of it for our own purposes, but we kind of break things into four different buckets. Maybe there's a fifth now as well. But the big part of I would say the weight of our portfolio is in our potash royalties. These are assets that run for, hundreds of thousands of years from now. No discounting model will ever do them justice, and I'd almost go as far as to argue that the entire market cap of the company could be supported on those, because I don't think I'd sell them for less. So that's one piece of the puzzle. And then on the base metal side, there's our original Voisey's Bay royalty, the stream on the Chapada mine, which is a Lundin project in Brazil that generates around about $15 to $20 million a year at current prices. There's some other development stage projects. There's a new discovery on that Lundin project that we think is likely to get built this cycle. And then iron ore has been a big part of what we do, but a very particular part. We're very keyed in on the growth of electric arc furnaces in the steelmaking market. This is at the expense of blast furnaces. It's happening as we speak, and those steel plants are very particular about the type of iron ore that they can take in. So we've been focused in on that for quite some time. We have an exposure through Rio Tinto's IOC mine in Canada, royalty exposure, as well as a development stage project that Champion Iron Ore is just published feasibility results around. And then the final piece came about in a little bit of an unusual way. It was originally a series of coal royalties in Alberta, which were basically expropriated from us by the Canadian and Alberta governments when they phased out coal-fired electricity, and that drove us to, what are we going to do? These were meant to be, 30, 40, 50-year royalties. What are we going to do for shareholders to replace that business that was basically just vanished overnight? And that's when we began to form a company called Altius Renewable Royalties, which is now a public spin out, and it does royalty financing on renewable energy projects, primarily in the US. One of the hallmarks of Altius in royalties, one of the things I think that really distinguishes it, is that we're really focused on long life assets. So the longer the life, the more optionality we believe is embedded, the higher the ultimate returns. And so in the renewable space, what really attracted us was the fact that the resources, the natural resource that we're taking a royalty on, is in those cases perpetual. But overall, the business right now generates in the order of $80 to $100 million. Across most of our exposures, we're long past payback. The weight of our acquired royalty portfolio really happened around 2014 to 2016 when the mining industry balance sheet got beat up. We stepped in pretty big. So, that's going back almost 10 years. But yeah, we've had simple payback in most all of those cases, and we're generating, for the most part, certainly double-digit yields against purchase price across the whole portfolio.
Your suggestion that the potash royalty is worth the market capitalization is interesting when one considers that if every other asset is redundant, the market value of those redundant assets is over $400 million versus a $900 million market cap. That would suggest, if you're correct, I'm speaking in Canadian dollar terms, that the sum of the parts is $400 or $450 million larger than the price of the whole. That's a very interesting proposition.
Well, again, on our website at our investor day, we go through some of the methodologies and the hypotheticals that allow us to draw those conclusions. But with the potash, it's the long lives. The current analyst net asset value calculation for the potash royalties, 95% of the potash that we own is discounted to oblivion, and that's where I take some exception, because I don't believe that that potash is from years 15 on is not valuable. But the other thing I'll say, I'm not going to get into trying to speculate around a NAV number, or anyone can do that math and come to their own conclusions. I will say this though, we are very aggressive buyers of our own shares here, so let's just let that speak for itself.
Robert Friedland has also pointed out that for very large, high-quality assets, that discounted cash flow is an illusory methodology, because at the end of the discounting period, you start the clock over with the same starting valuation, which means that the terminal value of the assets is almost always understated. But let's talk about returning capital to shareholders. You're generating enough cash now that it would appear to be surplus to the needs of the companies relative to the opportunities available to you. So you have both a share buyback program and a dividend. Talk something about returning capital to shareholders, and talk to me too about a discussion that you and I had 5 or 6 years ago that you may or may not recall, where we discussed the fact that you have to balance every acquisition against reducing capital, which is to say that a new expenditure has to generate more net benefit to shareholders than buying in your own shares. If you could talk about that, because I think it's an interesting acquisition and capital allocation metric.
Yeah, it's absolutely true. I don't even put buyback in the category of shareholder capital returns mentally. To me, it's M&A. It's competing with an external acquisition. So if we're thinking about allocating capital to buy something new and adding it to the portfolio, it absolutely has to look like a better either strategic or straight up financial. There has to be accretion in quality and financial metrics. Otherwise, we're really happy to just continue to buy more of the assets we already own on a per share basis. And, it's actually pretty simple, really. I mean, that's what we do. We buy passive interests in high quality mining assets, and we try to buy them for less than they're worth. And that can be somebody else's asset over here, or it can be the ones we've already assembled. It's just per share. But yeah, I mean, we do have a dividend. We've had that running for several years. We actually kind of found it kind of neat last year. We didn't even know we were being considered for it, but we somehow made the dividend aristocrats list in Canada. So that was, I don't know if that was in the original list of goals 30 years ago, but here we are. So it's, it's important. I think preserving our capital structure is first and foremost, I think, how we benefit shareholders, and for the most part, letting these big long life assets follow their course through cycles, get invested in, grow, have their prices increase without us having a share of the costs, eroding our margins. This is not rocket science. This is not a hard business to run.
May not be.
Just don't do dumb things.
Not many people have been able to not do dumb things. Congratulations for working 3 decades, Brian, to become an overnight success. Should my attendees wish to contact you, and they should, who at your company should they contact, and how should they contact that person?
Yeah, so Flora Wood is the person who handles frontline investor relations, and she is fantastic. She is one of the most straight shooting, honest people you'll ever meet. So Flora can be reached at Flora, Flora, at altiusminerals.com. And I'm sure you'll really enjoy the conversation, and she'll let me know all about it and tell me that I have to call you back, I'm sure.
Brian, thank you for 30 years of efforts on behalf of shareholders, especially 30 years of efforts on behalf of myself. And thank you, too, for your ongoing support of the Natural Resources Investment Symposium. We look forward to welcoming Altius and hosting Altius in Boca Raton, Florida, July 7 through 11.
Can't wait. See you there.